Cool, John. Thank you so much for coming today. For everyone watching, John is co-founder and group CEO of Omnisient, and we recently closed a deal together, or you guys closed a deal, and we assisted you in raising $7.5 million from Arise. Today I just wanted to have a conversation with you just to celebrate you guys as clients. It's been epic to work together. You have an amazing team. Working with Justin and Madeleine has been epic. Having you on the court has always been epic. You have a wealth of experience amongst yourselves. Maybe tell us a bit about yourself and your background and Omnisient.
Yeah, cool. Thanks, Tim. And I must say it was a pleasure working with you guys, and thank you very much for helping us get that deal over the line.
Sure.
It sets us up well for the future. So, I'm Jon Jacobson. My background is, I suppose I'm a BSc computer science. Before I did that, I was 2 years military. I worked as a diamond diver for a while up on the west coast of South Africa. And I backpacked for a year and a half, and I got to varsity when I was 23. So by the time I got to varsity, I kind of had a clear view of what it was that I was going to be doing.
Yeah, hectic.
Which kind of, I think, helped me. So I went in and I did a BSc computer science. And the thing I remember, quite honestly, was the horror of doing maths after 5 years of never seeing a maths textbook again. So that's very vivid in my head, actually. Yeah. But then I went on and I did a BSc in computer science, and I majored in computer science and economics, and I got a sub-major in maths. And after that, I became a programmer pretty much. And it's what we now call a software engineer, but my early career was very much around building low-level serial communication. So before the internet came along, even in the early stage of the internet, it was radio modems you were using, and you'd hear the sound.
Exactly.
That's serial communication. And so I was building systems like that in South Africa for electronic funds transfer, and then I went to the UK and started doing the same thing. South Africa was pretty advanced, as you probably know, Tim, that there's certain areas in certain sectors we're very, very advanced. For instance, we had ATMs and we had SAS switch and interconnectedness between banks long before anywhere else in the world. And it was the same with electronic fund transfer systems or EFT systems. So I did that for 2 years in the UK. And then my wife and I got engaged in London, and she's a medical doctor, and she was accepted to Mount Sinai in New York to study psychiatry.
Sure.
And my plan was to go set up a safari operation in South Africa, so we followed her plan.
Yeah.
And so
how it normally happens that way.
Yeah, exactly. Yeah. I lost that argument, like 10 love, just knocked out. So then I went to New York, and I landed up working for an investment bank, Credit Suisse First Boston, which was one of the big 5 banks in the city at the time, and I learned loads. I spent 5 years doing that. I landed up running the global financial reporting team out of New York, with a user base of 300 guys globally. And I learned a lot from that experience from the Americans. And what I learned there, I think I've tried to apply in its most basic form over and over again, which is if you have the right people, you let them run.
Sure.
Yeah. So, and then after that, I came back to South Africa, and then since then I've been an entrepreneur with some failure and with some success.
Yeah.
And Omnisient is probably is a business I started with my partner Anton about December 2019. We incorporated with a couple of investors, including Nedbank and Investec. And what we did was we wanted to prove the principle that as privacy law was coming around, that you could actually allow businesses to collaborate without ever sharing personal information. That was the trick. That they could actually collaborate. You could link data, but you would never expose the PII, personal information.
Sure.
And obviously, what this was a kind of a backlash against what Cambridge Analytica and those things that had started happening, where people was becoming very concerned that their data was effectively available for sale by anybody who wanted to sell it. And GDPR then came into play, and then so we built that first layer in line with GDPR. And subsequent to that, we then kind of started building in an AI component to it focused into retail and financial services, knowing that retail data next to what the bureaus typically get from the banks is the best type of data because it's recency, frequency, and the nature of the transactions, which tells you quite a bit.
Yeah.
So we built the business around that, and then and we scaled it from there. And then today, and obviously on the back of the last deal, we're a business that's got about 100 different companies collaborating in our cloud. We've expanded into the UAE and formed a joint venture there with a private equity firm that's and building almost like a JV there with a separate investment outside of this one of $2 million. And we are also offshoring and growing our business in the UK and the USA.
So I mean, you certainly are a pioneer in the field of, I think, business intelligence, computer science, starting back in 1990, and I think every second person these days is studying that. But back then, it certainly wouldn't have been the case, eh?
No, I mean back then, so I went to Rhodes, and one of the big things, because Windows 3.1 had just come out when I started my BSc in computer science, so it was and Windows 3.1 sounds like a bit of a joke now, but it was a massive innovation,
Sure.
So back in the day, the guys were still programming based on, on mainframes, and if you went to UCT, because of the size of the classes, you just didn't get computer access to be able to do your pracs. You had to write code for your pracs, and the great thing about Rhodes was most people were there to get wasted, and so not many people were doing the pracs.
Take advantage of being sober.
So I mean, look, it's not to say that I wasn't part of that scene, but at the same time, I was just getting my pracs done, and there was a lot of more computers available, and so that was important in the day. Now, now obviously Bill Gates achieved his dream, and there's a computer in everybody's desk, but it wasn't like that back then.
Cool. So just diving into a bit of the work that we've done together, and part of it has been initially setting up your offshore structure to kind of break out of SA and into offshore markets.
Yeah.
Can you just talk us through a bit of the thinking around why did you need to leave South Africa? What was the main incentive of breaking into offshore markets, and what was the route to get there?
Yeah, no, it's a good question, and I think probably your principal, Adrian's he's probably better placed than me, because he obviously set up the structure and knows the complexities of how Saab works better than I do. How do I think about it as an entrepreneur?
Yeah.
I see Saab as a barrier because if you're a guy like me and you're setting up a business like this, really what you're really trying to do is you're trying to exit.
Yeah. The
exit is why you do this, right? You put in all the hard yards. In my case, I invested quite a bit into the business before we even raised other investments. So I'm kind of the seed investor in the business. And you're doing all of that because you want to exit the business. And I think the problem that we face as South African entrepreneurs, and there are incredible entrepreneurs in this country, is that you're not going to realize the value on the intellectual property you built if you can't offshore it, because you have complexities around Saab in terms of whether it will or won't allow, one, the deal to happen, and secondly, how they will value your business, tax implications. There's lots of implications that make it just really, really quite onerous. So in a business like mine, we're raising capital all the time, and we've got venture. I mean, the round you guys just helped us close, that's our 5th investment round in 4 years.
Sure.
And so obviously people are investing in a business like ours because they're looking to realize value. It's actually a value creation exercise. That's what this is all about. It's value for the shareholders, it's value for my people, value for my customers. And if I can't continually grow the value of my business or realize the value of my business, then I haven't done right by my shareholders. I don't regard Saab as a shareholder in my business. Saab gets the benefit. And they're sitting on the side, but they're dictating the rules and the laws of how this works. So at a point in time, and I think this happens with many South African businesses, some do it earlier, some do it later, you try and find the right timing that, okay, this is real. You're balancing out this thing of 99% of startups are going to fail at some point in time. You want to be in that 1%. And you kind of hit a point where you say, okay, I think I'm going to be okay. And once you think you're going to be okay, that's normally the time. So it's an instinct that says, okay, this is the right time to
pull
offshore.
the trigger, yeah.
Yeah.
And I guess part of that is growing and raising your funding. You've got to find investors that are both aligned with your business and find your business attractive.
Absolutely.
And when they're looking at that, they're thinking about the same things you're thinking of. What are the blockers and what could inherently affect a potential exit? And if they're coming in from the UK or the US or wherever they are outside of South Africa and they don't understand the complexities of SARB, it's quite a concern for them, right?
Yeah, absolutely. So, and if you think about what we did in this round, right, we made sure that we had that UK structure set up. We capitalized the UK structure.
Yeah.
So now that we actually have a UK business that's sitting with a couple of $1 million in it, and in putting this round together, what became very apparent was there is a lot of interest in our business overseas, but the complexities of the SA market, and obviously what's also important is that you can show that you've offshored and that you have customers. But what you really want to be able to show is that those customers are not subject to the SA business so much as they are customers of the offshore business. And so that's the trick. And if you can navigate all of that, then you can easily raise venture capital overseas.
Yeah.
And that's when you start getting the multiples you're starting to look for, you know.
Yes.
So which kind of can get you up into, you know, that kind of unicorn status. And I mean, obviously that you want to try, I mean, you want to try set some ridiculous, you know, big, hairy, ambitious goal for your business and then try run after that.
Yeah.
That's you know, and you have to be able to believe that, right? So
and you're only really in the race once you get out of the South African border, I guess.
Yeah, I mean, to get to that kind of valuation, for the kind of scale you need, I would think so, because, you know, you typically want to be doing, you need to be doing at least $50 million ARR, so, you know, annual recurring revenue, $50 million. It's difficult to do $50 million
Not a bigger
ARR in, you know, South Africa, even. And, you know, obviously Arise themselves are investing in banks across Africa, and that becomes part of our play. But $50 million ARR to sell licenses and platform services, to be limited just to this market and maybe a bit north of the border, it makes it very difficult to achieve that goal.
Sure.
So you want to open up those markets.
Yeah, absolutely. Maybe a good time to kind of lead us into the next thing I wanted to talk about, and ultimately coming down to post-investment and investor comfort around, now that you're offshore, I'm sure your investors are a hell of a lot more comfortable, but getting to that point, and maybe for anyone who's listening to this, what is the process of negotiation that you go through with an investor before they become a partner? And over the last 5 rounds that you've raised, how do those relationships evolve? From kind of sitting across the table and negotiating a term sheet to now you're on the same side of the table and you're adding strategic value to what could ultimately be a really great success for everyone.
Yeah, I think it's consistency in the story you tell. And I think even in the early days, we were telling a very similar story. You know, there's going to be a time we need to offshore this business, but there's things that we need to be doing. So I think a lot of it's communication. You know, you kind of think about your shareholders as they're allies in this war you're fighting, and they each have a role to play. And that's how I've always thought about it. Like certain, for instance, for me, the banks that have been investors are also customers, and and that's their role. Their role is to become customers, and we managed to achieve that with both of them.
Okay.
You know, I've got for instance, ShopRite as an investor. ShopRite's also a customer. That's important, but because of the nature and scale of those businesses, they can bring incredibly good advice, right? And so they can almost, you know, we've had people sitting on our board that, you know, often I feel like we punch way above our weight because of the people who sit on our board and the gravitas they themselves carry, you know. And so you're getting pretty good advice out of those guys. And I can sit in a board meeting that I have once a month and sense check the idea. And the idea is this, right? We're going to offshore the business. When we first posed it, probably 2 years ago, after we just completed a round, probably like a pre-seed round, posed it at the board, and it was, that makes good sense, and it kind of felt like the right thing to do. So it's always a negotiation, and you kind of, and if somebody's pushing back, invariably they're pushing back not because it's. I suppose the point is this: is that it's fine for people to disagree with you as a CEO.
Yeah.
You know, really what you're looking for is to be working with people that are smarter than you, better than you, and have got more experience in their key areas. I've got experience and knowledge in a certain area, but I don't at all presume that I know everything about everything. I know what I know. But I know as well that if I can align with my investors around a strategy that's going to get us to that unicorn kind of status, and I keep pushing towards that, everybody's aligned around that. Everybody wants to achieve that. It can be a story you tell, right? But the truth is, there's a part of that story that everybody thinks could be true.
Yes.
And so you align them around that and you push towards that. And then the offshoring is just a logical part of that story that that you're telling. And but I do think you have to be consistent how you tell that story to your business, to the people in the business, to the shareholders, to everybody. There's that same story.
Yes.
I mean, you know, things change in a startup all the time, but the big picture idea of what you're trying to do, I think you try and keep consistent. If you can do that, you normally will be able to bring people alongside with you. And I think we have been quite consistent, actually. I mean, even in the early days, we told the story of retail data being used for financial inclusion, you know, and in the end we achieved that. But we, you know, and so I think if you go into this kind of game with a clear idea of what it is you're trying to achieve, and you are consistent, and you try and stick to
align people with the narrative,
and take them through the journey, then you can probably get there.
Nice. I'm going to jump back to something you said quite early on, and it reminded me when you said kind of surrounding yourself with the people and your partners. And what you said was you learned early on, build a team and let them run with it. What's your strategy, or what's your framework for finding the right people?
Yeah, I mean, so what I've experienced is you hire out of network at that senior level. And I kind of always go back to this, this Steve Jobs thing, that A's hire B's and B's hire C's. And I've built a couple of businesses, and I've seen that happen many times. You kind of, if you're running it as a CEO and you're running hard. And I mean, up until recently, I probably wore 3 or 4 hats.
Sure.
You know, I was until we hired our CFO, Justin. I was the CFO. I was also the chief technology officer. You know, probably the chief legal officer as well. Quite honestly,
you
drive people mad. But anyway, so you don't have time, right? And so what you want to do is the key roles that you're hiring for. You normally have worked with someone, and if you're like me and you've been around the block, you've worked with people that have done a good job for you. I normally look at it in kind of, yes, it's that one thing that person did really impress me, and I'll trust them to run with to become that ideal that we're looking for, because they've achieved something or done something that's impressive. The fact of the matter is if I look at my executive team, besides Julian, who's our chief marketing officer, none of these guys have played that role. Justin's never been a chief financial officer. Anton's never been a chief revenue officer. Marlon's never been a chief legal officer. Paul's never been a chief technology officer. So the thing is, like, you have these titles in the startup world, and anybody can fit that title if you allow them to run.
Give them the confidence.
And give them the confidence, and you back them and support them. And if you believe strongly enough in those people, and if you've worked with them, then you have that belief. But if you're hiring out of, someone who you've never worked with before, invariably there's going to be challenges. And I've seen this many, many times, where you're trying to fit their personality or their values into a team where we've already got values, and values have been well defined. And you tend to find that the people you've worked well with often have the same values as you. And I think that values thing is super important. I used to complete, like, it sounded like, it wasn't something that really...
But like fluffy
and soft. It wasn't, but actually I really believe more and more.
It aligns you at like a very fundamental level.
It's a baseline that kind of everybody reverts back to, Even when there's conflict, everybody goes back to, but we are the same, right? We think like this.
Epic, thank you. John, what were some of the biggest challenges throughout the investment process with Arise? And not specifically with Arise, but maybe you can draw on lessons and learnings that you've taken from all of your all of your fundraisers. But yeah, what were the expectations that you had, and where did those fall away, and where did you have to pick up the pieces? Maybe a few war stories.
Yeah. So I mean, there's always moments in these things where there's a curveball. I mean, and there were a couple here. I mean, probably the most interesting one was the day we were closing the round. One of our investors lodged a dispute around a commission claim. That was the day we were going to close the round.
Yeah, I remember that.
You know, it's like, and this is your shareholder.
Yeah.
You know, so at the same time, yeah, there's always those things, and I think then the relationship you've built with the investor coming in is critical. So so you've kind of, and a lot of that, you know, the honesty and transparency that you bring into the, you know, you can absolutely not go into any one of these transactions bullshitting about anything. You know, you can be confident about your ability to hit your numbers. You can, you know, but you need to be able to be. People will buy into you as a person, and they'll also buy into your team if you're not a bullshitter, and if they see that, and so, but that helps you later on, because when you do need to extricate yourself out of a problem like this, which is the commission claims, a big commission claim, it's a, you know, it would have meant that close to 10% of the raise was going to go to commission. I mean, you're an investor coming in. You know, that's potentially a deal breaker.
Out the door before it even lands with the company.
It's potentially a deal breaker, right?
Yeah.
And so I think it's important that, you know, you can go and have that conversation with the principals on their side.
Yeah.
And ideally come out with a good result. So that was one. I mean, I think invariably you never have as much time as you thought you had. You know, you start these rounds normally a year before, kind of, you know.
Yeah.
Kind of, and actually when you go through a due diligence takes long. I mean, Arise themselves are $1 billion private equity fund with serious due diligence on their side, with, you know, with significant LPs investing in their fund, and they have to walk a path as well. And so, I mean, I think from time to close, which is actually still not a bad result. I mean, we started our due diligence in December and we closed at the end of May. But that was like, and that was putting pressure on to get that closed done, you know, and that's 7 months of intense work all along the line with the team, myself, Justin, our CFO, and Madeleine, our Chief Legal Officer, intimately involved in every aspect of that deal, making sure things are kind of aligned, and it becomes your focus. It just becomes the focus. But it's invariably there, you know, your time around cash, around, you know, making sure you can continue to operate the business, that you don't have to slow any other aspects of the business down, because you need to keep investing in the growth of the business while you're negotiating.
It's a hell of a thing. I mean, you're basically trying to close an investment the whole time while you're trying to keep the business afloat and
running hard, and you also obviously have to keep in the back of your head any of the things that could trip you up, and then there's just the normal run-of-the-mill stuff. That, you know, I mean, invariably, like for instance, you know, we had one of the banks, we had a big deal signed with them. The bank comes to us in January and says, okay, well, we're slowing down, you know, we're tightening up on some aspects, so we're not going to renew our deal, right? And that impacts your cash flow or your whole calculation around where you're expecting. So we're forecasting all the time around
so many balls in there.
Yeah. The thing about it is that, you know, people think cash flow, but the truth about a business like ours is cash flow is a moving target, because you're forecasting revenue based on deals that you know or should close, and you have some confidence in them. What really throws you off is where you've closed a deal and all they're going to do is renew, and then they don't renew.
Jeez.
You know, and sometimes that could be 10% or 6 or 16 or 20% of your forecasted revenue.
You're basing your valuation on.
You're basing your value on
a rolling recurring.
Yeah, absolutely, that's right. And so it's all of those things come into play. So around and closing a round is
it's hectic.
It's difficult to explain, but it can become it becomes all consuming basically. Yeah.
When you brought up the fact that one of your stakeholders kind of brought up a dispute right at the end for a commission that no one was aware of, it made me think just about how complex some cap tables can get. maybe just talk us through bringing on the right investors and the right partners and the pros and cons of a big cap table, because I'm sure there's a hell of a lot of stakeholder management that goes into managing 15, 20 shareholders or less or more.
Yeah, and I think it's also part of the South African entrepreneurial, tech entrepreneur stories. If you're raising capital, we did pretty well in our first round. And it's also those phases we navigated, right? And so in 2019, 2020, if you think about what the timing of that, right? Because COVID hit in March 2020.
Yeah.
And we closed our first round and had capital in the business by February 2020. And then COVID hit in March 2020. So it shook the markets up completely. So it became like the subsequent raises were much harder, definitely. The market was in a different place. And you guys probably would have seen it more from the legal side, how probably less guys raising between 21 and 22 as the market rejigged itself. All the liquidity came out of the market. So a lot of, so these kinds of novel type of investments like venture capital became like, whereas at one point in time, and guys were investing in Bitcoin and whatever, and then obviously the liquidity that, as interest rates started rising in the US and then obviously knock on into the rest of the world, liquidity comes out of the market, and so there's less money available to invest in venture capital. So at that point in time, you don't have the luxury
bringing on one partner,
or some, or some super, big name venture capital business.
You almost have to take what you can
take
get.
What you can get, absolutely. And who's around often are family offices, small cap businesses, looking to get like some margin on a deal. But you have to raise, and you want to keep running your business. And I don't really, for me, that just becomes part of the deal. So we kind of went through that phase definitely in 2020, where we were kind of raising. We raised then. We'd done a small raise with the banks, and then we raised a year later. We raised with a number of small businesses, and managed to raise around 21 million rand. So like $1.5 million, I think at the time, dollars. It was a good raise for us as a business, but there was like probably 7 businesses. There was actually one of our investors invested $15,000 in that round.
What?
Yeah. So like in my mind, like in those, a lot of this, I think, can be about ego. I have no ego in these things. The truth is, you're raising for your business. If somebody says to you, "I want to back you," for me, that's an honor. The truth is, you might say, "Okay, down the line, it starts looking a bit." And you see like cap table, right? So it can start looking a bit unwieldy.
Yes.
But there is that opportunity down the line to buy those people out. And that's honestly what's happening now. We're seeing that with the Rise guys coming in.
Yes.
And so I think it's an incredible story we're telling, because I've got investors that came in 2019 that are getting, there's been a 20x growth in the value of the business. And they're getting a 10x return, Those guys that came in 2020 are getting a 5 to 6x return now, 3 years later or 4 years later. Guys that came in a year later are doubling the value. So I think I worry less about that, honestly, which is the unwieldiness of the cap table, except it looks unwieldy. So you look at it and say, yes, I've got a lot of investors. But actually, we kind of have processes to manage that. We run quarterly shareholder meetings. We make sure everybody's well informed. You got to keep the people aligned, and then it doesn't really matter if you've got 10 or 100 investors.
I guess that's very important, right? Like whether you have 5 investors or 100 investors, they've taken the chance on you, and you need to give them the respect to provide them with information, keep them updated, keep them on with whatever's going on with your business.
And that's exactly how I think about it. It's like the guy that said yes could have said no, right?
Yes.
And so at a point in time, as you start getting into these bigger raises like we're doing now, like we're raising 7, we've just raised 7.5, and we're going to raise another 5. Then it doesn't make sense. Like you're bringing guys who want to put in $50,000 into the business. That just would make no sense. But at a point in time, it's fine. And actually, you know, there's a story about that, because these guys were one of our first UAE investors. In fact, our first UAE investors, and they made an introduction that has now led to us forming a joint venture in that market a year and a half later. So those guys were very active, actually, even though they were probably the smallest investor on our cap table.
Yeah.
Probably one of the most substantial kind of investors that helped us grow the business.
So I guess there's 2 points coming out of that, right? Like, it's really the narrative that that you walk from the very beginning, and in venture capital, there's no recipe to it.
No.
There's going to be COVID, there's going to be all sorts of things that happen, and there's going to be times when you've got to take small amounts of cash just to keep things moving. And the second thing that I see in that is you're not only applying value to an investor based on the money that they put on the table. It's also the strategic relationships that you can build with those, who they are going to introduce you to, what value they bring to the table outside of cash.
Yeah, no, absolutely. And you know, I always try and do that. Like, I never think about it as, yes, the money's coming in and the money's significant, but if we're a business and we put our mark on the table, and our mark is we're going to expand this business and we're going to build an international business, anybody that's coming in from outside our market is a potential opportunity to do that. And you have to ask that question. Right?
Yeah.
And so in that case, it actually was, those guys were super, super valuable. But if I look at it now, you know, I'm seeing that over and over again. I mean, in terms of ShopRite's investment, that potentially leads to a larger investment, because they're part of a much bigger investment fund now with other retailers that are global. And the trick then is that the people that you're working with, your investors and your customers, always want to say good things about you. And so the way that happens is that you deliver. And so you kind of, you also have to be consistent in terms of your approach, in terms of always being on it, deliver good services, good technology, make sure your customers are happy. I mean, one of the things I'll be most proud about is, I mean, at least in the last investment round, I think we did it in this one as well, one of our shareholders ran an NPS, spoke to 10 customers, and out of 10 we got a score of 9.2.
Sure. You
know, and so what often happens in these investment rounds is one investor, you invariably don't have one investor. I mean, a rise is unusual, because normally you have a couple of investors coming in to invest, and normally they rely on each other as part of the due diligence. So one investor goes off and runs that and does the customer, because there's always going to be a customer engagement as part of an investment round. They're going to want to speak to your customers, they're going to want to understand how your customers think about your product.
Yes.
Would they renew? You know, are they talking to their mates about you? So that becomes part of the thesis of the case of why people invest in you.
Yes.
So all of that stuff is super important. And that, I think, for me, it's not just consistency in terms of your approach of how you engage with your shareholders, it's how you work with your customers, delivering on the technology you said you were going to deliver on, rather than, all of that stuff becomes super
important.
It's all important,
Yeah.
And that's why the team's important, actually, because it's not like I have to do all of it. But if you've picked the right guys to run those roles, they will naturally do that anyway, because your values at the baseline are all aligned.
Yeah. Cool. 2 more questions. First one, it's quite a dangerous one, but how did you find working with Domisa, working with myself? It's one of the biggest transactions I've worked on. As I said, I thoroughly enjoyed working with you. You guys, your team, Justin, Madeleine, yourself, a wealth of experience. I love the way you managed the transaction, how everyone got stuck in. But how did you find working with us? What did we do well? What did we do not so well? What could we do better?
Yeah, I mean, the thing is, I've actually worked with Domisa, not with you, obviously, Tim, but I've worked with Domisa, I think every round we've done, you guys have represented us. So I've worked with other parts of your team. Strange enough, I'd never worked with Adrian on an investment, on a round. So I kind of felt that we'd stepped up a level, and you guys brought the A team to us, which was awesome. which was good. I mean, not to say the guys we worked with before, they were excellent, but I kind of felt like between yourself and Adrian, and obviously your fan, and you were party to a lot of those conversations of what we were dealing with on the other side, and some of the idiosyncrasies we felt we needed to bat. But against all of that, I mean, my measure is we closed the round when we needed to close the round. And so we got a lot of stuff done. I mean, and what that required was that you guys were always available. You were on call and you were ready on weekends. I mean, that's for me is kind of, so I'm actually super grateful. I think you guys did an excellent job, and I'm not just saying it because you're sitting here, because at the end of the day, my measure of success is that we closed the round when we needed to close the round with a hell of a lot of complexity, with an offshore in play. So you've got a moving target of an offshoring business. We had two rounds actually. Even within one round, we're investing in SA and we're investing in UK, managing different law. And all of going on there. There was a lot going on. And so I thought the teams worked well. I thought the team worked very well.
Awesome, thanks. Appreciate that. And John, last question. If you have, just for the startup, early stage business, venture capital ecosystem, any closing words, anything you'd just like to leave on the table for people to think about? I think for me, I'm proud of this country. I'm proud of the entrepreneurs that we kind of grow out of South Africa. There's always the big ambition, I think, is for a lot of people is you build a business and you offshore that business and you exit the business, and then that gives you scale and opportunity. And I expect a lot of people leave. I think the message from my side is I think this country is incredible. I think that there's a way that you manage kind of some of the strangeness of the country and the way government operates with the things we can do as people. One of the things we've done all along is invest in education in the country, in schools, put back. I think that's kind of a fundamental. And I think it will also guarantee entrepreneurs out there better success. You just work on the principle, you can't just take, you got to give. And if you find that balance, I think actually, I think it comes back in your favor. So we try and do that as a business all the time, and that would be my recommendation. Guys, obviously you start a business, you don't have the cash. It's, at some point in time you find that you have a bit of leeway, you align your shareholders and you tell them, this is what we're going to do, and we're going to start backing not just our business, but the country as well. So that's my awesome. Epic. Thanks, John. Cool, appreciate it. Thanks for your time.
Thanks, John.